Hello, everyone, and welcome back. I am so glad you're here with me today because we are about to unpack something that really reframes how we think about the internet and, how we define value and honestly, what the future holds for human creativity. We've all heard that phrase, data is the new oil, or maybe data is the new gold. It's become one of those cliches, right? It gets tossed around in tech circles so much that we sort of tune it out. It's just white noise. But today, I really want to stop and look at that phrase literally because we are watching a genuine old-school gold rush unfold right in front of us. But in this version of the Wild West, the prospectors aren't hiking into the hills with pickaxes to, dig for nuggets in a riverbed. They are digging for words. They're digging for images. They're digging for our archives. We're looking at this massive structural shift in the media landscape, where technology companies, specifically the ones building artificial intelligence, are writing billion-dollar checks to access human-created content. And the economics of this are frankly staggering. I don't use that word lightly.
For some of these media companies, selling their dusty old archives to an AI is more profitable than their actual day-to-day business. So the core question we're going to explore today is this. How do we get here? How do we go from a world where AI companies were just, scraping the web for free, treating the entire internet like a public library they didn't need a card for, to a world where they are handing over hundreds of millions of dollars for licensing rights? And maybe more importantly for you and me, what happens when the free internet gets put behind a licensing paywall? We have a lot of ground to cover. We're going to look at what I call the gravy era, this initial wave of massive lump sum deals. We'll break down the specific players from OpenAI to Google and Amazon. We're going to look at the timeline of 2025, which really just accelerated this whole trend, and see how we're moving from individual deals to marketplaces. Think of it like a grocery store for AI training data. And finally, we'll talk about this thing called the Agentic web and why high-quality, human-verified content is suddenly the world's most expensive luxury good.
So let's jump right in. I want to start with the numbers because they tell the story here. I was reading a fascinating analysis by Rob Kelly. Now, if you don't know Rob, he meticulously tracks these AI content licensing deals. And he highlighted something he calls the gravy factor. Now, why gravy? It's a great term. Think about a traditional media company for a second. Let's say you run a newspaper. You have massive overhead costs, right? You have to pay journalists, you have to pay editors, you have printing presses or expensive web servers, distribution trucks, marketing costs. The list just goes on and on. Your margins are usually razor thin. But selling your archive, selling content you already created 5, 10, even 20 years ago to an AI company, that is almost pure profit. There is no new cost to produce it. It's just sitting there. Kelly compares it to the early web licensing deals back in 1994, where profit margins were something like 90%. It's basically free money. In this first wave of major deals, and Kelly tracked about 34 of them, the average deal size is roughly $24 million per year per publisher. That is not small change. That's enough to fund a serious newsroom. But the average doesn't even do justice to the outliers. We need to look at the big fish to really get the scale here. Let's look at the News Corp deal. This is the parent company of the Wall Street Journal, the New York Post, the Times of London, and a bunch of others. They signed a landmark deal with OpenAI, valued at over $250 million over 5 years. I'll just pause there. $250 million is a lot of money in any context. But here is the kicker, and this is the part that made my jaw just hit the floor when I first saw the data. In the 5 years prior to that deal, News Corp's total net income, their actual bottom line profit from all their global operations, all the papers, all the ads, all the subscriptions, was only $99 million total. I want you to really do the math with me here because it's just absurd. News Corp spent 5 years running a global media empire to make $99 million in profit. Then they signed one single contract with OpenAI to let them read the archives, and they make $250 million. This one AI deal is worth 2.5 times their entire net income from the previous 5 years. That is why this is a gold rush.
For a legacy media company, this isn't just a new revenue stream. This is a lifeline. It is, as Kelly puts it, gravy, baby. Overall, the total market commitments for just this first wave of deals are estimated at nearly $3 billion, specifically $2.92 billion. That's $3 billion moving from big tech to big media just for the right to read. And who is writing these checks? Well, it's exactly who you'd expect, but the breakdown is interesting. OpenAI is the dominant buyer right now. They're responsible for over 50% of these reported deals. They're the aggressor. They're trying to lock up as much high-quality data as they possibly can before anyone else gets to it. Following them, you have Google at about 12%, Microsoft at 9%, and Meta at roughly 6%. So we've established there's a lot of money flying around.
But let's move into the timeline of 2025 and look at who is actually selling what, because it's not just about news text. If you think this is just about ChatGPT reading the news, you're missing a huge part of the picture. When we look at the breakdown of these deals, we see a massive demand for images. Shutterstock, for example, has done 6 different deals.
FreePic is another huge seller. Why? Because if you're building an image generator like Midjourney or DALL-E, you need labeled, high-quality images. And more importantly, you need to pay for them to avoid the copyright nightmares we've seen popping up, where artists are suing these platforms. The tech companies want clean legal data. Then you have niche data. This is where it gets really interesting to me. It's not just about news. It's about specific technical knowledge. Stack Overflow, which is the go-to forum for computer code and developer questions, is highly valued. Why? Well, because if you want your AI to write Python code, it needs to learn from the best human coders in the world. Similarly, a publisher like Future, which owns brands like PC Gamer and Marie Claire, is sitting on a goldmine of specialized enthusiast data. And this isn't just a US phenomenon. We're seeing major deals with Le Monde in France, Prisa Media in Spain, and Axel Springer in Germany. The AI models need to be multilingual and culturally competent, so yeah, they're buying data globally. Okay, so let's walk through how this played out over the last year or so, specifically looking at the 2025 timeline.
It really helps to see the momentum, to understand where we're going. Early in the year, we saw a really unique deal between Axios and OpenAI. Usually these deals are just cash for content, simple transaction. But in this case, OpenAI actually provided funding to help Axios open 4 new local newsrooms in places like Pittsburgh and Kansas City. This is a fascinating development. AI money literally funding human reporters on the ground. It suggests a symbiotic relationship that goes beyond just strip mining data. It's almost like the AI knows it needs humans to keep creating new facts, so it's paying to keep the lights on in the newsroom. Then you had The Guardian signing a deal with OpenAI, but their focus was heavily on using the tech to develop new products. It wasn't just about handing over the archive, it was about getting access to the tools to build better journalism. As we move through the year, the scope widened significantly. Condé Nast, we're talking Vogue, Vanity Fair, The New Yorker signed a massive deal with Amazon. But this wasn't necessarily for a chatbot like ChatGPT. This was specifically for Amazon's Rufus shopping assistant. Think about the implications of that for a second.
If you go to Amazon and ask, what's the trendiest trench coat for winter 2026? Amazon doesn't want to just give you a list of coats with good SEO. They want to give you an answer that's grounded in Vogue's fashion authority. They want to say, according to Vogue, this style is in. That creates a premium shopping experience, and Amazon is willing to pay Condé Nast to power it. And speaking of Amazon, we have to talk about the New York Times. Now, you might recall the New York Times has been very aggressive legally. They sued Perplexity, the AI search engine, for copyright infringement. They've been very protective of their IP. Yet at the same time, they signed a deal with Amazon for Alexa and for AI training. This shows the complex dance that's happening here. Media companies are using lawsuits as a stick to force tech companies to the table, and then using deals as the carrot. It's a strategy of sue the ones who scrape, sign the ones who pay. It's a classic negotiation tactic, just, playing out on a global scale. One other trend that emerged in 2025 is the rise of intermediaries. Not every publisher is News Corp, right? A small local paper or a niche blog can't just call up Sam Altman at OpenAI and negotiate a $250 million deal. They just don't have the leverage. Enter companies like ProRata. They launched a product called Gist.ai and signed up over 500 publishers. Their model is fascinating. They track usage and split the revenue 50-50. It hints at where we're going, away from these massive, clumsy lump sum payouts and toward a system where payments are automated and based on usage. And that brings us perfectly to our next segment, the structural shift. You see, the lump sum era, where OpenAI just writes a check for $20 million and says thanks for the data, is inefficient. It's hard to scale. You can't do that deal 10,000 times with 10,000 different bloggers. The industry needs a store. It needs a marketplace. And this is where Microsoft has made a massive play. They introduced something called the Publisher Content Marketplace, or PCM. The concept is pretty brilliant in its simplicity. It's a system designed to give publishers a direct revenue stream while giving AI systems scaled access to premium content. Think of it like the App Store or like Spotify, but for AI training data. Microsoft talks about this in the context of the Agentic web. Now, that sounds like a sci-fi term, so let's break it down. We are moving from AI that just answers questions, like a chatbot, to AI agents that perform tasks. Let's say you ask an AI to plan my vacation and book the hotels, or maybe research this stock and invest my money. That is an agent. Now, if that agent is going to spend your money or plan your trip, it absolutely cannot afford to be wrong. It cannot hallucinate. It can't tell you a flight costs $200 because it read a blog post from 2019. It needs high quality, trusted, verifiable, up-to-the-minute data. It needs to know that the hotel reviews are real, or that the financial data is from a reputable source like the Wall Street Journal or the Financial Times. The Microsoft Marketplace is designed to be that trusted source. Publishers define their own terms. It's voluntary, moves the whole process from a black box where data is scraped in the dark to a transparent exchange. They actually co-designed this with heavy hitters like the Associated Press, Hearst, and USA Today. So this isn't just big tech dictating terms. The publishers are helping build the shelves in the store, so to speak. There's an interesting debate happening here about the business model, though. You have the OpenAI model, which is sort of all you can eat. I pay you a flat fee, and I ingest everything you have. Then you have the Microsoft Marketplace model, which is more a la carte, it's pay-per-use. Neil Vogel, the CEO of People Inc., which owns brands like People Magazine, he weighed in on this. And he's in a unique position because he has deals with both sides. And his take, he's happy with either model as long as the content is paid for. It's a pragmatic approach. Whether you buy the whole buffet or you order off the menu, the chef just wants to get paid. But Microsoft isn't the only giant trying to build this store. This brings us to the Amazon factor. There have been reports surfacing some leaked slides from an AWS conference suggesting that Amazon is building its own massive content marketplace. The implication here is huge because of who uses AWS. OpenAI and Google have their own models, but AWS powers thousands of other companies. If Amazon builds a marketplace, it would allow a publisher to sell their content not just to the giants, but to any company building an AI product on Amazon's cloud. It democratizes the data. Suddenly, a healthcare startup building a medical AI could legally license medical journals through Amazon's marketplace without needing a huge team of lawyers. A legal tech startup could license law libraries. And this highlights a technical nuance that is really important to understand: the difference between training and grounding. Training is teaching the AI how to speak. You feed it billions of words so it understands grammar, context, logic. That's what the big lump sum deals often cover. Reading the whole library to learn how to write. It's like sending the AI to medical school for 8 years. Grounding, often called a RAG, is different. That is when you give the AI a specific trusted article to answer a question right now so it doesn't make things up. It's like giving the doctor a reference book to look up a drug interaction during an appointment. If I ask an AI who won the game last night, it can't answer that from its training data from 2 years ago. It needs to go fetch or ground its answer in a reliable news report from today. These new marketplaces seem heavily focused on grounding. They are selling accuracy. They are selling the ability to say, according to the New York Times, rather than just generating a plausible-sounding guess. And as we look at this landscape, we have to acknowledge the legal backdrop. While all these deals are being signed, Axios, Hearst, AP, the lawsuits are still flying. The New York Times versus Perplexity, Penske versus Google. It's a chaotic time. The marketplace offers a carrot, a way to get paid. The lawsuits are the stick, the threat that if you don't pay, we will shut you down. So where does this leave us? What does this all mean for you and me? We are witnessing a synthesis of two eras. We've moved from an era where content on the web was just assumed to be free, monetized only by annoying banner ads, to an era where high-quality human verification is a premium product. The internet is effectively bifurcating. There is the free web, which might be increasingly filled with AI slop, bots, and unverified noise. And then there is the verified web, the content created by professionals, fact-checked by humans, and licensed for a fee. For you, the listener, this means that in the future, when you get a smart, accurate answer from an AI, whether it's summarizing the news or helping you fix your car, it's likely that a microtransaction just happened behind the scenes. A tiny fraction of a cent might have just moved from the tech company to the journalist or the expert who actually wrote the source material. It's a hidden economy of truth. And I want to leave you with a final thought to mull over. If these massive AI companies, the most advanced technological organizations in human history, are willing to pay billions of dollars for human-created content, what does that tell us? They aren't paying for the data because they want to be charitable. They are paying for it because they need it. Their machines, as smart as they are, cannot generate truth in a vacuum. They cannot witness events. They cannot feel. They cannot investigate. So if the machine's willing to pay a premium for human perspective, maybe we should reevaluate how we value it ourselves. In a world that is increasingly machine-generated, maybe the human element, the messy, biased, beautiful, verified perspective of a real person, is becoming the ultimate luxury good. The machines know it's valuable. The question is, do we? Thank you for listening. This is a story that's going to keep evolving, and I'll be right here to help you make sense of it. Until next time.